Hi everybody and welcome to Serene Education this morning. It's the 26th of October 2012 and I'm just going to be going over the four majors this morning, starting with the euro against US dollar. Okay, the daily. What did we have yesterday? We had a pullback during the start of the first part of the session yesterday morning on the European session. However, going into US session close last night, we noticed that price had pulled all the way back now, and the past couple of days where price is spending time above the 20 period moving average now has seen the 20 period moving average being breached, and we can see prices trading towards that all important 1290, the Fibonacci retracement area here. If I take the low that we had in July to the high we just currently have here through September of this year, here we go. You can see quite clearly that 1290, which is the 23.6, would be our target to start with. So very, very, very tight angle. But the overall target would be the institution, which is just roughly around here at the below the 128500 mark. Roughly, if you take the lows, if you just take the actual number itself, you're looking at roughly just below the 128500 mark. Ideally, I would take the target to the 128500 mark. Keep a nice round figure, and that'll take us back towards the institution moving average, which happens to be that major support and resistance level. You can see quite clearly through September we had a nice little bounce over here, a psychological bounce yet again on a nice morning star formation at the institution through the first part of October. So near term we could see price moving into the 1290 to start with. A little bit of hesitation, but ideally the psychological level at 1300, which happened in prior support and resistance level, the psychological round number here at 1300. Price yesterday failed to actually break that with that pullback yesterday, and we failed to see a close. After the prior day, we saw a lot of pullback after this negative sentiment going into that 1290. You can see that the sentiment still looks negative for the euro, so near term we should be looking at the 128500 mark as our first target. If I look at the other 6 time frames on this particular chart for the euro, you can see every single one of them. I just look at the 5-minute institution above price negative, CTC on the other side is red. 15-minute institutions above price, so I should be looking for negative sentiments, so the CTC is red. Institution on the 30-minute above price, hourly above price, 4-hour above price. The only one where price is trading where the institution is below price is on our daily. So you can see that negative sentiment now coming through on all 5-hour time frames out of the 6. So it tells us near term we should be looking for nothing more than shorting opportunities, because we are seeing lower swings on our 4-hour. You can see that a lot of negativity below the institution. Nice bearish engulfing candle here on the 4-hour chart. Hourly, you can quite clearly see just near term we had a breach of the prior support and resistance level. So you can quite clearly see here at 1293. If you go to the hourly chart, a lot of support here through the 24th and 25th yesterday. We got to see the hourly candle closing lower, and that would tell us that we should be looking for a nice look to the downside with a stop above potentially the 129600 mark here. But look for that confirmed break, and then we should be targeting 1290. So very quick in and out for the short term trade. You can see that 1290 is right there, and that is the Fibonacci retracement area, the 23.6 Fibonacci retracement area. So it's quite close. So just be aware of that. Otherwise, what we're looking for, if we get a nice break close below 1290, is an all important 1285, because that's our daily support and resistance level in the shape of the institution moving average. Next pair is sterling. Let's have a look and see what I had yesterday. Sterling, the total opposite of what happened on euro. Sterling, we're seeing a bounce. A nice bullish engulfing candle on the Wednesday, which is now seeing price yesterday. Thursday taking a really nice trip to the upside and heading towards that psychological trend line lows. You can see swing low, swing low, swing low, and now you can see price now yesterday heading into that and coming unstuck. Asian session, very tight range here as price has now come unstuck at the what time? You could say that was probably, if you just take it to the high of this particular candle there, just below the 1500 mark. So psychological resistance now at the price support and resistance level here in the shape of this bearish engulfing candle that we saw on the 18th of October. So now you can see if this is to remain negative sentiment, then we've got to see price now finding or stalling here, coming out potentially with a bearish Arami pattern, and then we should be looking at price potentially moving back down towards that all important 1600, which happens to be our psychological run number. And if price can get back below that and find resistance, then we should be looking for long-term negativity to be the factor. So near term, we've had a pullback. You can see the intermediate trend on our daily. We've had the pullback now. So we've had a swing low, swing low. We've had action in this area. If you had to take the bodies, you'd see something similar. I've taken the wicks. I always tend to go for the wicks, my preferred trading style. So I would like to clearly, if this is to be positive long term, I want to see price action for the first start of today getting above 1500. If I can go into the US session this afternoon and see price trading and closing high on, say, on a 4-hour chart, a nice bullish engulfing 4-hour chart here, then ultimately for the new week, going into the end of play today, looking to potentially look at long-term targets back up towards that 16,300. Otherwise, not interested at all because the sentiment is looking negative near term because of this trend line support. So there could be potential of both. If I see going into the US session this afternoon, we have a bearish engulfing candle here, like a nice bearish Arami, and I see negativity coming in, then we should be looking to potentially target the 20-period moving average intraday, and that 20-period moving average would take us back towards these levels here. Just draw a trend line here. Oops. Roughly around the 1607 mark, back towards the 20-period moving average, or 1605. Okay, so intraday I know exactly what needs to happen now. On our hourly chart, I do need to see a nice closing, break and close higher than 1500, or I need to see a break and close. You can see the institution moving average is now at 1607, so I need a nice juicy break and close below the 1607. Get below all that on my hourly, then I have a clear target to say, well, hold on a moment, long term, for coming into next week in particular, I could start targeting these lows we had back here, roughly just short of the 15900 mark, which happens to be that major support and resistance level below us. So I have a clear direction as to what price needs to do. You can see the 4-hour, I've got the institution moving average to deal with. On this particular pair, 5 minutes, the institution above price, so that's negative short term. However, my 5, 15, 30, my hourly, and I've got bullish sentiment. Okay, it's only the daily and the 4-hour that I have the institution above price, which is telling me it is the daily. The 4-hour I have above price, which is resistance, and the daily, which is still positive because the institution is below price. So I know that on my 4-hour, I've got this consolidation area over here to be aware of, and that's the nice thing about it. I need to see a decisive candle. So you see, I have a lot of the 4-hour. I've got a lot of decision into this resistance area here. I do need to see price now either tackling and trading higher than 1500. You can quite clearly see there's a 1500. Get above all this. Then I'm looking for this will be genuine buying sentiment. What we're seeing here, this correction. If not, what we could see is a bearish engulfing candle at the institution, which would tell me that I'm seeing lower swings, and you can see prior lower swings now going into this. So I should be looking for that negative sentiment to continue for the foreseeable future, and particularly going into a new week. You can see the 1600 here, a lot of support through here on the 4-hour. Get below that, then I'm in new territory to the downside. Onto the US dollar Swiss franc. Okay, daily consolidation high here at 9400. We know that because you can see quite clearly that's where the institution is, and you can see each time price has pulled back, it's tested the psychological level here and failed to actually move. Just recently we had an evening star formation through October, price pulled back, and then it's just been ranging, to be honest with you, between the 925 and 940 breakout here, which failed to really take momentum to the downside. But you can see price has just been moving within this channel. So if you want price to move away from that channel as soon as possible, or what you can do is you can just trade the channel itself. There's a nice 150 pip channel. So if we're going, you can see the US dollar now is buying into 9400. If we see price, you can see it's consolidating. Very small trading range last night in the Asian session. I think they're well aware of this resistance level here, and it's also, you see the 50-period moving average also dipping into where price the institution is coming to. Notice the CTC on our side very much negative, so we should be looking for nothing more than selling sentiment near term. So look for that consolidation here as we head into the Friday close today. So if anything, you might be able to get a couple of pips to the upside towards that 9400, but be aware that you want to be taking profit off the table when we head into that psychological era. You don't want to have all your chips on the table at once. So there's a 9400 above me. I know that's the institutional high, and still buying sentiments, yes, but buy into 9400 and that's it. Higher swings depicting upside movement here for the US dollar against the Swiss franc. Trading above the institution was positive. Do need to see a nice bullish engulfing candle on the next 4 hours to constitute that we should be still seeing positiveness to the upside near term. Quick look at my 6 time frames. I can see the institutions below price on my 5, below price on my 15, below price on my 30, below price on my hourly, below price on my 4 hours. So I know that intraday I should be looking for nothing more than buying sentiment, because I have all the institutions below price helping price support. You can see the histogram on the other side on these time frames all showing positiveness. So I'm not looking for selling sentiment. I'm only looking for buying sentiment. Okay, I'd only start to really worry when I start seeing the histograms going red and the price action on my smaller time frames actually trading below the institution. Okay, so look for a nice, you can see near term the Asian session from yesterday. You can see by 10 o'clock last night GMT. You can see we're trading below that, and this morning as of 6:30 GMT on my 30-minute in particular and my hourly, you're starting to see that consolidation area being breached now. See the consolidation area here? Okay, so you take the high of this candle, the 21, take the high of that. We want to see a nice bullish engulfing candle. You can see this morning's 1 hour candle has been to the upside. However, you can see it's now trading at the underside. Wait for this hourly candle to close. If it's closed higher, then look potentially for a nice little trade to the aggressive entry. Put your stop under the 9335 and then see how far you can take 20 pips off that one. Last pair of the day is US dollar Japanese yen. A nice bearish candle last night on the Asian session, and you can see where price is trading. We got above that psychological support and resistance level in the shape of the 80 mark. So I'm just going to put that in so you guys are well aware of where it is. And you can see where price is now coming unstuck. Yesterday's candle trading straight through that. And I did mention yesterday morning that we want to see price now maintaining above 80. The longer it stays above 80, the more likelihood price is going to continue to the upside. We are trading below it as we stand now. Okay, this is still very early. We have until the close of this evening to see where price is taking us. So this particular one, I wouldn't be trading primarily because we're trading in and around a major support and resistance level. I like to see where price actually finishes off. If it finishes off to the upside, then I should be looking to target further highs going into a new week. However, if it trades below that, see what happened before. Traded above, then we're taken away. Then I should be looking for resistance now at 80, and then target first, or short term for the new week would be roughly around here at 79.50 as price now heads back towards an institution moving average. Okay, so very, very important. This one over here, I'm not really going into a lot more detail because primarily the only thing we can watch is by the start of the US session. If prices manage to get above the 80, then look to see if we can actually see a bounce, a psychological bounce at 80, and we could trade back up towards the highs here at the 80.30 going into the close of play this afternoon on the US session. The other outlook is going into the US session this afternoon, we're seeing price still failing or to get above 80. That could constitute, look for a nice a bearish engulfing candle at the underside of 80, and then we could see price targeting the downside going into the close of the session this evening. So that's it for the analysis in Japanese yen, and that's it for the analysis for this week. I hope you have a fantastic trading day. Please look at the news to see if there's anything out there that could actually factor into price action. One or two things we have the Spanish unemployment rates figures 8 a.m. GM this morning, which is 15 minutes away. We also have the very important one this afternoon at 1:30 p.m. GMT is the advanced GDP quarter-on-quarter figures. Very, very important for the US market. They're expecting a better quarter-on-quarter for the GDP figures. If that comes out higher, then you can see the US dollar really rallying because they're telling us that we're starting to see some expansion. Okay, so other than that, have a fantastic trading day and have a fantastic weekend with family and friends, and I'll see you first thing on Monday morning. Until then, trade serenely.